What's on, everyone? It's Tuesday, May 26th, around 12:15. So I know it's been a little while since the last video. I believe it's been about a week or so. Just been a little busy this week, but I'm going to continue on in this week and try to do a little bit better. So towards the end of the video, I'm going to speak about a couple new ideas for the channel as far as helping people actually get onto the trading platform themselves, and maybe a couple like Bitcoin tutorials or something, but we'll speak about that towards the end of the video. As for price action today, I'm going to actually go ahead and replay what's happened since the last video. So I believe this is around where we had tested right around this supply line up here. And you can see that since then we've broken the demand line towards the bottom here, which was around the 382 that we pointed out, and also broke past this moving average, which I had spoke about in the prior video. We are getting a slight bounce off the 0.5 here, and we do have some moving average support below. But I do want to speak about a couple things that I had mentioned in the last video. So first, we were speaking about a possible fake out towards this region over here. Just to touch on that, the moving averages are not looking exactly how I would have preferred them to at this point. I would have preferred a little bit more sideways movement, which would have helped these moving averages kind of curl upwards a little bit more. The reason that happens is because price action is gradually moving towards the 618 or this low region over here. Typically, when I'm looking for a fake out, I'm looking for something like this, where we have large candles with a decently large wick to it as well. And that tells me two things. First of all, it tells me that a lot of sell over here. We had a decent amount of volume come in. It was right around the top. I believe this was actually probably the most amount of volume we had in this entire uptrend since a big drop. And it does look like it. So that was the first thing I was looking for in my fake out scenario. So clearly we didn't get that. The gradual breakdown tells me a different story. As opposed to a lot of people dropping their positions or selling short around here, this tells me that people were slowly, either removing their positions, taking profit from their longs, or slowly building a short position. This isn't as nice of a build up for a fake out, because when we go back up, we're going to have a lot of resistance, as opposed to something like this. When we go back up, because we had such a dramatic drop, we kind of just smoothly go back up, creating higher lows the entire time, and it's pretty much a stair step right on up. So that's why I'm not really looking for the fake out anymore. Instead, what I'm thinking is happening is the ascending triangle that we were looking for is probably looking to, not looking to form. Instead, we're probably going to continue this downtrend. And I'm going to show a couple examples of how we might see that start. So I know a lot of people are speaking about the possible falling wedge right around here. I'll just go ahead and draw that out for you. I typically don't rely on or use falling wedges for my own trades, especially these short-term trades, but sometimes they can be successful, and I'll show you how I come up with a play for them. And typically for them, I like to keep my stop losses nice and small, nice and tight, and that gives me the best risk to reward. Since I typically, like I said, I typically don't like using these patterns as much. But what we can, figure out about this this pattern a little bit, if we dig in a little bit to this pattern, the pattern itself is a falling wedge style pattern. It occurs in an uptrend. So in our midterm uptrend here, we have price action that goes against that trend. So we have the the nose pointed towards south here, and it's typically a five wave or A B C D E move. So what we'd be looking for is our 0 up there, our A, our B, C, D, and our E here. And like I said, I don't typically like to use these patterns, but the way that I do like to play them is if we have a higher low in this region here, that increases the confidence level of this pattern to me. So this 4-hour candle just started, but it's typically after a large breakthrough move like this where we can't break the low of the previous wave, that will continue to create higher lows here and have a breakout. And what I'd be looking for if we do create a higher low here, me personally, again, because I don't typically like playing these patterns, I look for another higher low somewhere around this region here, and then that breakout. And typically that breakout is followed up with either some stalling price action or a retest. For these kind of regions, I prefer a quick stall in price action for maybe an hour or so, and then to break out further towards the upside. And so where I'd be looking for to make a play would be somewhere around this region here. Again, I'd like to wait for that second low, and then I set my stop loss to the prior wave low, so that E, below that point, and that would confirm to me that the trend that I'm looking for, which is a higher low, higher low, higher low, is intact. And if that breaks, then I don't want to really be in that position. I don't like playing those patterns. So just to look back in history, to hopefully find a couple of these patterns within a similar trend. And I'm just going to go to the previous trend right here, which again was a midterm uptrend here, or if you want to call it a bounce or whatever. And right away you could clearly see this falling wedge right over here. This one is very clean. And then we also have one over here that's a bit more hidden and not as clean, but I'm going to point it out and dig a little bit deeper into it, just so that we can see what maybe a different type of structure for a similar psychological pattern is trying to show us. So again, let me start off with this one here. Again, we'd be looking for that 5 wave or A, B, C, D, E move within the pattern. So you have your 0, A, B, C, D, and E. And again, if we're assuming that this is the style of a falling wedge that we're currently in, we're currently right around that E, E wave in current time. And you can see that we had this, large bar move down here. Excuse me. And you can see that we didn't break the prior wave that I believe that's the C wave. Yeah, we didn't break that C wave's candle wick low. And then from that point forward, what we did, which again is what I like to look for when I'm playing these patterns, we had our A move up. We made another higher low right there, and then that's when we had our breakout. And again, from that breakout, we had a quick stall. This was a 4-hour stall, and then we continued our move upwards. And the risk reward for this, again, is really the main thing that you're looking for, since I don't personally think that these are as reliable patterns. So if you were looking for a long, I'd be looking for that higher low right there. My stop loss personally would be either below this point here. Sorry. Would either be below that E wave there, or if you wanted to have a bit more risk, you could have it below that C waves point there. But either way, it's a decently small risk there for a large reward. And how do you figure out the reward? For these patterns, pretty simple. You just take it from that high point to the low point, or from your demand to your supply line, either way, and then you put the the bottom right around the breakout area, and so you could see that your risk to reward was this is a fantastic RR over here. And then I do want to speak about the follow-up price action from that point and how that relates to the that midterm trend, that midterm uptrend that we were in. So you could see that the measured move got you, if you were taking profits right around this area, you had amazing profits at that point, but obviously there was more profits to follow. So what happened here exactly? Well, we were still in in the trend. We were still in the middle of the trend. So sometimes when I think about price action, I'd like to think about basically a vehicle or something moving, reaching a destination, and along that along the path to the destination, you have different points that you're going to stop, whether you're stopping for food or gas or water. And so when this trend started, we know now in the future and from hindsight that the destination was here. The destination was 10,500. But during our trip here, we were only around 8,000 or 9,000 or so. So because we had this small bullish pattern within our longer term uptrend, we were able to continue past our measured move because we had not yet reached the destination. So I bring that up to speak about this next pattern here. So even though we have a similar price action going on, where we have basically constricting price action within a range here. Again, we could kind of point out a five-way move or an A, B, C, D, E, and it's going to look something like this, where you have the A, 0A, B, C, D, and E. So I want to point out the differences and the similarities between the three falling wedges that we've been looking at so far, this being the third. So when we get to the E here, as opposed to the previous two, our current and the previous falling wedge in this trend, our E did actually make a lower low than our previous C wave there. But the follow-up price action was pretty much just higher lows. So if you were looking to play this kind of a pattern here where it's not as clean, you'd basically still be looking for higher lows, and you'd be looking for that retest. So because of this type of a breakdown where we went lower than our previous low, I would be looking for this retest more so, right? Because this wasn't as confident to me. Whereas if we had our low here and then we had a higher low, there's a little bit more confidence and there's a better region for me to be able to place my stop loss. Whereas this kind of gave less of a safety net. So if you did end up waiting for the breakout, you had two chances here. You had two retests to be able to get into this point, and both of these were higher lows than this previous low. So could have gotten in there. Same thing with the measured move. If you're taking it from that point, you just take it from the supply or demand line to the opposite line, either way. And from the breakout, you could see that, again, you got out pretty much if you were taking profits within this region. This was a great, could have been a great risk to reward here. If you set your stop loss below that point there, or if you wanted to set it below that point there. Not as great of an RR as the previous wedge, but that goes to show the difference between having a more clean looking pattern as opposed to a little bit more choppier one. And again, I want to focus on the follow-up price action from this point forward. So after that breakout, Bitcoin had reached its destination, right? And the proof and the confirmation of that was this higher low area here, and really the fierce sell-off afterwards. And you could tell that this is really telling because every single high after that, just we just kept using the previous high as our resistance. So this became resistance. This area around here became resistance, and yeah. So the difference between those two falling wedges was really the point in time in which they occurred on the way to the point that Bitcoin was trying to get to. So that point was 10.5. When we got to that 10.5, even though we had a bullish pattern within a bullish trend, the trend was exhausted at this point, and we can tell that because of the follow-up price action after the breakout from this falling wedge. So how does this relate to where we are today? Honestly, it gives us, I think, a really unique view and maybe an idea how to play this current trend. So if we are assuming that we are still earlier in this trend and Bitcoin has not reached its destination for this trend yet, then we're assuming that we're in this falling wedge here. All right, we're assuming that we're in a similar falling wedge or a similar point in our destination here, similar point in our path to our destination here, where we'd be looking for a breakout. And if we do end up breaking out towards the upside here, I'd be looking for either a test all the way up here, and even better would be to break that point. And if we break that point, that would tell us that that would be confirmation that we are continuing our trend here, that this wasn't the end of the trend. Whereas if we get action more like this, where we break out here, maybe we actually use this breakout to confirm that this demand line is now actually resistance, and it actually becomes supply, from where we'd start reversing and maybe head back down towards the mid 7,000s. I think would be our first stop before maybe a small bounce and then continuation of that downside. So yeah, that's about it for today. A couple things I do want to mention. So for the channel, I was thinking I might do maybe a BitMEX or a Bybit tutorial. I don't prefer BitMEX. I definitely do prefer Bybit for multiple reasons, but I will get into that in those videos. But I might do a video tutorial for each. I'll be sure to go into cross leverage and leverage in general, just because that's pretty much what those exchanges are used for. And I might do a couple other tutorial videos, maybe for more beginners, just how to secure your Bitcoin and how to send your Bitcoin securely, and maybe even how to generally upkeep security on your computer or wherever it is that you are storing your Bitcoin. Even though if you have a decent amount of Bitcoin, definitely the best place is offline storage. But yeah, so I just want to introduce maybe a couple ideas for videos upcoming. So besides that, if you guys enjoyed the video, please like, subscribe, and leave a comment if you want. And yep, enjoy the rest of your day, guys.